Monday morning. It's pretty early on August 7th. Let's get started on the weekend stocks and straddling stocks. We've gotten a lot of things down to a science lately. I'd have to say that pretty much everything I've been putting out has been going according to plan recently. And certainly when it comes to straddling the stocks. Now, what I mean by that is I've done a ton of work on this analysis file that looks at possible stocks to straddle, buying a call and a put at the same strike price for a period of time on an option contract. When you do that, you need the company to move a certain percentage amount. And if they do, you will be able to lock in money due to the laws of intrinsic value of options. So because that was a broad statement that it's very complicated if you break it down, but what I'm trying to get to is it points out companies that are good to straddle on. So if you've caught any of the videos that I've done about straddling stocks, they explain a lot of the methodology. I just want to go through what it says to buy because it is having an amazing run. Using companies that have low break-even boom percentages over their earnings period are really good. So let's talk about that. So what's showing up on here? KKR, 1OK, OKE. OKE is actually the best one who's reporting earnings after market on today, Monday. Meaning you'll get to see their earnings. You can buy an option before their earnings come out if you buy it on Monday morning. $252, 3.87% boom number, and it expires on the 18th. Very inexpensive. You get to hold them over earnings. They're only $65 a share, but if they move 4% or just about a little bit over $2.50, like that they can go to 68 or down to 63-ish, 62 to 68 for sure. You're definitely going to make money more than 10% if they go that far. So watching these companies move after earnings, it's not unreasonable for a company to move 4% after earnings in either direction. The straddle covers both directions. So looking at this list, OKE is the buy for tomorrow. That's the best one on here. KKR actually reports before earnings, so you can't even get them. I think it's going to change by the time they open drastically. So you're kind of missed out on this one already. But I wanted to tell you just how quick and easy it is because I already updated as much as I could to get this current, and I was able to, get that answered. So OKE is going to get bought first thing in the morning. What's supposed to happen here? They're supposed to release earnings and they're supposed to move, and moving 4%, as I said, it's not unreasonable. So you're trying to sell one of the options tomorrow after they or Tuesday after they announce earnings, Monday after market. You hope they move more than 4%. And you hope you can sell one of these for $300, either the call or the put. You try to make $50 on that $252, which is 20% in one day. Trying to buy it Monday and sell one of them on Tuesday. That's what this kind of shows you where the value is. Anything else reasonable? I saw QSR was another one that's reporting earnings on, I think, Wednesday. Yeah, QSR has a possibility here. They're at a 4.83% boom. So that's more than this one. You can see how much a better deal this one is. Okay. But this is still below 5%. And that's kind of where the cutoff is right now. It's $350 and their strike price is 73. So can they move $4? The answer is probably they can. And so this is another good one for this week. Everything else, I just didn't see anything reasonable. I looked all the way till Wednesday so far. Now I want to show something else in this video. I'm talking about the break-even boom percentage because this is, the lower this is, the closer this is to like 1% even, means that the company just does not have to move much in either direction for you to be able to bank profit due to the intrinsic value of one of the options moving enough so that you can sell it for more than the cost of both of them. Well, looking at all of the companies by break-even boom percentage, you start to see ones where there are really exceptional deals. And I tried to really grab the current option price here as of Monday morning before the open to explain how this is the list of, are these companies really good companies? Well, Kimberly-Clark, so cheap. So cheap. This is a $127 a share company, and they only have to move a little over $2 this week. That's not a lot. It's 1.68%. It's such a great deal that when I see numbers this low, I mean, I know this is expiring this Friday. I don't think there are any holidays this week, so this is just 5 straight days. It's just really difficult to lose your shirt here because they have to stay exactly on your strike price of what, 127. They'd have to like go down by 70 cents and stay there for 4 days for you not to be able to sell these options for at least some recovery value of 50% or more. But they're probably going to move. So it's just like this is an order, and I recognize a lot of these companies. Procter & Gamble is another one. $155 share company. They need to move $3. You can make over 10% if they just move $3 between now and Friday. It's less than 2%. It's just great value here. I know there's not earnings coming up for these companies. There is for Walmart, not next week, but the week after, which makes Walmart a good pick this week in case there's any run up or run down before earnings. Here, $158 a share. They got to move $3. If you try to buy the option that expires after the earnings period on the 18th, it's going to be much more expensive than this. It's going to be, I think, at least $500. But this is pretty reasonable. They just don't have to move that much, right? So I wanted to show this in this list because it brings up a lot of companies I see all the time: Waste Management, Procter & Gamble, Hershey sometimes shows up here. Pepsi sometimes shows up here because they're under a 2% boom. TJ Maxx has earnings coming in 9 days. This is very cheap. Look at that, $85 share company, $167, because they're not generally a big mover, but this is so low that especially earnings coming up, not next week, but the week after, are they going to see a $2 move this week? Very, very likely in some direction. So AbbVie usually shows up here as great value. IBM shows as great value. These are all companies I've taken before and won almost every time on them. Not every time, but almost every time, like 90%. And with the current, I'm working with a buddy of mine who's taken this upon his own. He's doing this himself. He's 12-0 right now, and he's using earnings all the time. So in that sense, you know, what's supposed to really hit tomorrow? It's supposed to be the OKE. So what you're supposed to buy. So we'll keep an eye on this, and we'll see if this company moves, you know, $3 or more in either direction after earnings, maybe into Tuesday. And that's where you try to take a profit there on Tuesday, and you'll still hold the other option until Friday. The other one that's not worth very much at all. You can hold it for a while to see if they move back around and switch around at all. But just, you know, the worst you can do here is they don't move, and you can still sell one of these options by on Thursday or something for probably at least $100. It's tough to lose more than 50 or 60% of this on the worst ever case scenario, but that is just not the way it goes. They're going to report earnings. There's going to be some movement or sell off. They're going to move a couple bucks in some direction, hopefully more. And you're highly likely that you will be able to take profit before Friday in one of these for more than $252. So that's what the algorithm is recommending on Monday morning. We will see how that goes. All right. Good luck. May all your trades be winning.